Okay. Speaking of avoiding service, one of the hot topics 5 years ago were iBuyers. Now, really, the iBuyer concept is another concept that's not really new. There have been investors who made cash offers on properties for years. But the idea of having companies do that was new 5, 10 years ago. Why? Because there were venture capital companies, which I would consider companies that they funded kind of like high-priced prostitutes. These would be companies that have no ability, no real market skills, but if you dump enough money, they're bound to get some sales. And then over time, they try to figure out if we put the competition out of business, then we can adjust our business model, make money. Kind of like Amazon. Amazon basically built its business by avoiding paying sales taxes. And after they put out of business so many booksellers, they're the #1 bookseller. They didn't do it by being a better bookseller. They really did it by cheating state, local governments out of sales taxes, competing unfairly. And once they destroy the competition, then they look like a powerful company. Well, that's what happened with venture capital companies. Opendoor, for example, they would lose money on every home they sold. I had a listing I lost because they came in and offered a customer a ridiculous price, and they closed and they end up losing money on the property. So they lose money. Of course, they lose money. They don't pay any taxes as a company that loses money. I lose business because I didn't make the income on it. My family doesn't get money, and I don't pay taxes because I'm a taxpayer. So Opendoor has functioned that way for a while. Now they flipped the script because now, like I guess like prostitutes, but like any other business, at some point, your benefactor says, "Hey, you need to start making money and carrying yourself." So the Reza Club, a great service that I use, I follow them, points out that now Opendoor makes $50,000 gross profit per house. And I thought, well, that's interesting because the average house they buy is about $400-something thousand. So their gross profit is like over 10%. And one of the things when you break down their services, they charge a 5% service fee, but they don't charge a commission. they charge a 5% service fee, but they don't charge a commission. Well, okay, all that means, what it really means is they charge a service fee and they're not obligated to follow the laws that I am because they don't call it a commission, they call it a service fee. It costs the customer the same. It gives the customer less protections because I, as an agent, have to safeguard and watch as a fiduciary my client. Opendoor is obviously in a opposite strategy. They're buying the property from the buyer, so they have no obligation to be fair to them or disclose to them or be ethical to them. And so as a result, now we have sellers who are selling homes to iBuyers like Opendoor, paying the same or more that they just merely put the property on the market with a competent local agent. Now I use iBuying programs. I have investors I work with. I'm with EXP. We have a great program in-house. We, in fact, can sell homes through Opendoor. The difference is I have a multitude of options versus just one. And I think this Opendoor concept, which sounded great at the beginning, the reason why it's not growing is because it's a competitive environment. And like everybody else in a competitive environment, it's much harder than it is when you can just spend somebody else's money.